Okay, let's talk about soybeans real quick. Or not real quick. There's lots to talk about here. I would say the first thing I'd like to mention is I call it the fun fact for the day. But speculative managed money funds are now they now have their biggest long bet in corn, wheat, and beans since 2012. They're long 692,000 contracts. Okay, 692,000 contracts. So that's gonna be something to watch here. I think what they're doing here is just this reflation trade, and there's outside money that wants to be on board in case there is inflation, and we're seeing that obviously. And at the same time, these products help lead us out of the problems that we had in 2008. So a little bit of a history here. Outside money being attracted to what's happening in our sector. So keep an eye on that. We've got a lot of outside managed money that's looking to get long, or at least buy some more, I think, to be on this trade for the rest, or at least for the now until we come up with these acreage numbers in the short term here. So keep an eye on that. Last night, the technicians we gapped higher, right? When we gapped higher, we call it an open and go, like gap and go. The technicians like that. They kind of get on board, and that's something that they would like to follow. But we actually backed off and filled in that gap. We were able to end up higher in the day by about March 12 and a bit cents, so we had May up about 14 and a half. That's strength. So we came in, filled that gap in, and then we went on, we took off again. That also is a pretty strong technical indicator there to see us gap and go overnight. It's a 20-cent trading range we had while we slept. Came back in, filled that gap, and then we took off again. That's going to be a pretty healthy indicator to those technicians out there. If you're a producer, is it time to reevaluate? I mean, look, March has been stuck in a 1 month 65-cent kind of a whipsaw trading range. Does that mean we're building a new base to push higher? Or does that mean we're kind of running out of oxygen, running out of gas at these levels? That's what we have to keep an eye on here, right? This 65-cent whipsaw trading range we're seeing in March, this might be a time for you to kind of take a look at stuff and think, hey, are we building a new base to take off higher? Are we running out of fuel and oxygen up here? I think that's going to be something that you're going to have to take a look at with the other two things to kind of build an idea about where this product's going. But 65 cents is a pretty big whipsaw. And I would say that the two words that we have to think about for this year are going to be buckle up. So that's what we've got in soybeans. We'll see if we continue with this volatility going throughout the week.